All right, good morning, guys. So welcome everyone. So I did a previous video and it got taken down by YouTube, I guess for violating their terms and services or the rules or whatever. So I just want to preface starting the video just to say that everything I say is for educational purposes. Please do your own research and look into these concepts that I'm talking about to make informed investment decisions. This is just what I do. Does not necessarily equate that you will get the same results as me. With that being said, let's get into it. So today, so I guess this will be my first video because my original video got taken down. So I just want to start by saying that I am an aspiring day trader. I am not yet a profitable, consistent day trader, not with real money anyways, but I have made decent results in backtesting. So right now I will be backtesting, on NASDAQ, the live markets though. But I will not be using real money. I am using paper trading funds. I am not using any real money. Just wanted to start by saying that. So anyways, with that being said, I'm going to do my pre-market analysis and then we'll go from there. So it is currently 8:49 a.m. and we had news that came out, I believe at 8:30. I believe it was enrollment or something like that. Let me double check real quick. It is, so at 8:15 actually, we had, ADP non-farm in employment change, and it was bad for the US, so we were, yeah, we did worse than expected. So at 8:30, let's see, we had a tank in price a little bit, but it was still supported by, fair value gap, so that looks very bullish to me. So just marking out previous day's candle. So we're gonna mark out previous day low. This is the wrong style. Yeah, so previous day's low. Check. And previous day's high, which is in my opinion more important because I think we are bullish today, but only time will tell. So alright, so that's that. Then we go down to the 4 hour. Okay, and then okay, so we already took out previous day's low. That's cool. So we have, oh, I didn't change this to previous day's high. Previous day's high. So previous day's high to target. We also have this buy side liquidity right here. So this is buy side liquidity. And if you guys don't understand the concepts that I'm talking about, I trade ICT concepts. So concepts such as liquidity, buy side liquidity, sell side liquidity, things of that sort. I will have a video up talking more about my trading style in the coming weeks or days. So if anyone does watch this video, because this will be my first one, so I probably won't have like any people really watching in the beginning, but if by some chance someone does end up watching my videos and you have something that you want me to cover, please let me know. So okay, so this is a 4 hour fair value gap. I want to see where this closes. Could inverse it. So right now we don't have any bullish PD arrays, not that I can see anyways. I also want to check out Forex. I wonder what Forex is doing. Okay, Forex is not really doing much right now. It's just kind of back and forth. So okay, because I was watching Euro Dollar as well as NASTAQ right now. Anyways, just trying to fix this. Alright, so no bullish PD arrays that I can see supporting price, unless we want to count like maybe equilibrium of this range, which could support price higher. Which, yeah, we dipped down into equilibrium, so that's very bullish. We came right back up, rejected off of equilibrium, we came up. I wouldn't want to see us inverse this 4 hour fair value gap. So as far as I can tell, that's the most I've seen on, that's the most I've seen on thingy on 4 hour. Sorry, I'm just looking at the S&P to see, because we had this 830 move, which was right here, supported by this 5-minute fair value gap. It wasn't really a big move actually. So then we go on to an hour. I want to see bullish PD raise. Okay, so here we go. We had this come down and we had this fair value gap in a discount that supported price higher. And this is a 1 hour fair value gap. Oh, it didn't save. Oh, no, yes it did. 1 hour fair value gap, great. And we have a 1 hour fair value gap here. It looks like we kind of inversed this, but I want to see what it's going to do at 9:30. Because we came down, but we still have this long. We kind of just inverted this, but I want to see what it's going to do at 9:30. This is a 1 hour fair value gap. And we just, I want to see some more displacement than that. And then going on to the 30 minute. So we have a 30-minute here and we have a 30-minute here. You're probably like, Tatiana, why are you marking up your chart like this? It's kind of confusing. Honestly, it really does get confusing. But it's necessary to see how price will react. And then also, like, this is a 30-minute low. This is really, you have to mark these out. Also, another thing that I do not have up on my charts right now is the session highs and lows. Really important. Really important. Because sometimes you can have it's a 30-minute. Well, okay. Move these over. I actually don't want this here anymore. It's kind of confusing. That was just, I just deleted the equilibrium line. Yeah, so just made everything a little bit more neat. So that's what we're dealing with right now. So the idea, so okay, so going into 9:30 open, what I would like to see, mind you, I'm still on like the 30-minute. So oops, did not mean to do that. I meant to go to the 5-minute. Okay. So going into 9:30 open, also move these over a little bit more. I like to see what my zones are. Okay, so what I want to see going into 9:30 open is some type of sweep of liquidity. So, and then I have S&P here to see if I'm going to, if any sort of SMT is going to be put in. But ideally, I would like to see some sweep of liquidity going into 9:30 open. So I want to see maybe price come sweep this 50-minute low here, this 30-minute low, maybe find support at this 1 hour fair value gap, and then I want us to have like some indication that we're gonna go higher and maybe target, oh crap, I can't even see my targets, previous day's high, buy side liquidity, and this buy side liquidity. But realistically speaking, probably previous day highs, the more realistic target. I don't know if we'll get all the way up here, but I think this is a really good long shot. This is a really good area, and I'll probably just target 1 to 2 if we get a setup, or I'll just target previous day high. So, oops. So this is a 5-minute? Yes, it's a 5-minute low. Okay. So I'm gonna just go back out to, that was a 4-minute fair value gap. So, okay. Ideally, what I'd want us to see is us inverting this fair value gap. That'd be a very, very good sign. So it is currently 8:58 right now. We still have 30 minutes until market open. Or equities open, I should say. Right now we're holding. But we're in a market maker buy model, and we actually came back to equilibrium. So that's very bullish, because we rejected off at equilibrium and then we're going up. What I want to see is us rejecting this inverse fair value gap, inversing that, and then heading towards these targets up here. As you can see, these are relatively equal. I think this. Then we have buy side liquidity here, and then we have previous day's high. I don't know. I would say this market is priming for in a bullish run. I just want to see, but it's kind of tricky because I have to watch that 4 hour. We kind of already inverted it, but on a higher time frame anyways. But I don't know what 9:30 open's going to do. It might not even get down here. It might just maybe sweep the 5-minute low or maybe the 30-minute low, and then reject off of that and go higher. But my criteria for my strategy is that I need to see some type of session sweep. Also, I really hate these words. So unnecessary. How do I turn these off? Like the letters. This is not, I just found this in the indicators thing. I just need something to mark out like my sessions. I don't want the letters. I'm just turning off random things. I really don't want to see show warning. What? Oh yeah, I really didn't need all that. What the heck? I don't need all that. Wow. I turned off mostly everything and I'm still... Wow, I cannot choose to turn off the letters. That's so ridiculous. Oh, whoa. So unnecessary. Change it to 9%. Or is 9% too light? I think 15 is fine. I think 20 is just too high. Ooh. Honestly, I really just wanted to get rid of the words. The words are so unnecessary. But this indicator won't allow me to get rid of the words. Alright, 9:01. Really not much to do until 9:30 if I'm being honest. Yeah, not much I can do. Oh, okay. Wow, okay. I can draw the boxes but not the words. Okay. Not much to do, not much to do. Alright, let me check euro dollar. Oh my god, my trade idea was going to work. We inverse this fair value gap. Oh my god, we did. But I don't know if this would, honestly, even if this did work out, I wouldn't really do anything with this just because it's an unusual setup. We did inverse this. We can also inverse this one. All right, nothing. There's really nothing. Next time I'll do this earlier. I'll do this like at 9 o'clock or 9:15. 9:15 might be a little bit too early. Okay, while we're waiting, because this is very boring, I'll just talk about what my strategy is. So I trade ICT strategy, and I trade using a list of confluences such as, or maybe I should just go over the elements of my trade idea. So my trade idea is daily bias, whether the market is likely to go up or down. So that's basically what I do. Then I look for some type of manipulation or liquidity sweep. So that's like a run off a low or high, depending on where we're going. So manipulation is like an opposite move to the actual move. So if like we're going higher, we want to first go lower. If we're going lower, we first want to go higher. And that's what we call by manipulation. It's a fake move that gets traders out of the move before the market moves in the actual direction. So that's why I said if I'm going to target the highs, I want to see some type of liquidity sweep. And I've marked out all the possible liquidity sweeps, which is this 5-minute low, this 30-minute low. We could come back and find, well, I do want to see some sweep of this. We could also sweep out session highs and lows. We can sweep out data highs and lows. Data highs and lows would be this one. This would be a data low because 8 of 15, we created this candle here. This was because of news. So this is a data low. So we could come and sweep out all of this and then move higher. Also take note that it's only 9:04 and price has essentially been consolidating here. It's not moving. It's not going to go anywhere until 9:30. So that's what I use. And then honestly, my model is actually kind of simple. And then I just look for an entry strategy. I like an entry model or an entry, but I have, which are entry models. So my entry models are inverse fair value gaps. I also have fair value gaps, and I have change in state of delivery, which is technically an order block. And that's honestly basically it. But I also trade during certain times of the day, so sessions. So I look for, I trade during London or New York typically, and this is in Forex or in futures. So those are the two asset classes that I trade, Forex and futures. So sessions, and I trade London and New York, trading the similar concepts. But my hit rate is mostly in New York. So yeah, I think I'll have a better chance in London on Forex. But this is basically my model: daily bias, manipulation, entry models, and sessions. And then obviously I have my confluences. So my confluences. So my confluences. So confluences are essentially, what do I see in price that gives me the conviction to put a trade on? How many things can I stack up to, give me an edge or give me confidence to put a trade in? So that would be a sweep of a low. Can't spell. Sweep of a low. SMT, which is kind of like a imaginary sweep of a low, and then we have in a higher time frame, in a high time frame PD array. So high time frame PD arrays, it would just be like a high time frame fair value gap. So like this 1 hour fair value gap is a high time frame PD array. So if we came here and held, that's very bullish to me. And if we got an entry model, then that's even more bullish. So there's that. Sessions, because this is like when price is most likely to do something. And honestly, I have so many other confluences, but I can't think of them off the top of my head. You could be above or below the 12 a.m. open. So for example, I'm bullish, but I feel like this is more applicable to London session, but for example, let's say 12 o'clock, right? 12 o'clock was here. No. Here, right here. So the open was here. So we're right at 12 a.m. open, which is actually a good sign. But like for London, right? If we're going to go higher in London, we want to be below the 12 a.m. open. If we want to go lower, we want to take our trades above the 12 a.m. open. So that's a confluence as well. As you can see, we actually did get a breakdown. We were below the 12 a.m. open down here. In terms of an entry, it doesn't really look like there was one this day. Maybe if you went down lower. So it was kind of messy down here, but we came into this fair value gap. We took out a low. We inversed. Okay, so I think let's go up to a 2-minute. You can kind of tell when there's like a fair value. Okay, so we went below. We inversed this fair value gap here. So you could have like put an entry here. And your stop would have had to been here, and it would have teeter-tottered around a lot, actually. But I would say we finally broke it here, and then we kind of teeter-tottered around a lot, but your stop would have had to been below here, so you would have been protected. And then it would have, and then you could have targeted like all the way. If you were really confident this was going to be bullish, you could have targeted, you know, a simple 1 to 2, or you can target like the 12 a.m. open. Or whatever other targets. So that's a confluence. So 12 a.m. open, I guess I'll just put it down above or below the 12 a.m. open. That's another confluence. So it's just basically how many things can you stack up. Oh, I just remembered another one. Discount and premium, whether we're in a discount or premium, or whether we're respecting equilibrium. So discount and premium. So like being aware of all these concepts give you an edge, but obviously your model has to have some underlying foundation. These are just there to help you. So when I talk about underlying or overlaying foundation, I'm talking about this. So this is basically all like the main things you need to have a good make sense setup. This gives you the context. These just help with the probabilities of whether the trade is going to work out or not. Or, you know, what gives you confidence to put on a trade. Also, I'm sorry if I'm like stuttering a lot. But I will do my best to... Next video, I'll try to be a little bit more clear. It's just because we're waiting. We have 20 more minutes until 9:30. Also, I want to note that we've kind of been trending up a little bit. So this is low resistance liquidity. This is a very good sign. This means that price has a very high chance of coming back down. Also, these are relatively equal highs. So that's even better. So we'll just see what happens. But I'm going to get rid of this. But that's basically, I'll leave that there for now. I'm liking how price is developing. One thing I wouldn't like to see at market open is if we went straight to the high. I mean, we could still get a setup even if that were to occur. Potentially, like if we gapped up, but we hadn't taken this yet and we left a fair value gap, we could probably enter on that, given we have a sweep and a change in state, or some type of market structure shift that indicates that we're going to go higher. Then we could probably do that, but I prefer to see a sweep of the low, and I typically like to take my entries on the 5-minute. I don't always take them on the 5-minute. It really just depends. Sometimes I take them on the 15-minute. Sometimes I take them on a 3-minute, the 2-minute, the 1-minute. It really just depends. I do feel like there's a level of discretion sometimes when you're taking these setups, because you won't always take them the same. You just have to really fall back on your experience. So yeah, I'm gonna take a quick look at futures. I meant not futures, sorry, Forex. So we actually came back up to this fair value gap again. Forex is developing very slowly. And this just put in relative equal high. That's not good. Yeah, Forex doesn't look like it wants to go lower. It's already 9:13. Forex New York typically finishes up around 10, or at the very least you want to put a trade on before 10, prior to 10. I missed a really good trade in the London session on euro dollar, and I outlined the area prior, which is really sad. I might start looking at Forex to take trades, because I do have a live account on Forex. I don't have a live account on futures yet, but I do have a small Forex account with some money in it. So I might start taking some trades if I see any on Forex. I personally think Forex is easier to trade than futures, but again, I don't have that much real market experience making money over time yet, so I can't really say, but I studied Forex before I came into futures, and my experience is that Forex is easier. It's just a little bit more predictable. It moves a lot more fluid, whereas futures has like really strong bursts of liquidity around certain periods of the day, primarily equities open, which is 9:30. You won't really see. You can sometimes see like bursts of liquidity in Forex at around 7, like around New York session, but not in the way that futures does it. Futures is like absolutely a beast. So if you want something a little bit more calm experience, a little bit more predictable, and has like moves really generally nice to some extent, then Forex is like your go-to. But honestly, knowing how to trade both is still very useful. And the good thing about ICT is that the concepts are applicable to any market, so I could trade similarly in futures as I would trade in Forex. You just have to be aware of like a few differences, but the concepts still apply even in Forex. Okay, we have 15 more minutes. I'm trying to see what else I can talk about as we wait. Okay, so I'll just talk about a little bit about me. So I've been trading off and on since maybe high school. I'm 24 now. I'm a graduate. I graduated 4 months ago. I picked up trading maybe my junior year of high school because my mom has traded Forex for many years. And she's always like taught me the importance of being your own boss and like, you know, trying to build something for yourself and your family and not working for someone else, working towards your own dream and not working towards anyone else's dream. So that's kind of, and I also went to a trading class with her. She paid for the online trading academy, and I went to some classes with her, and I tried to soak up as much information as I could. They taught primarily supply and demand, and I kind of picked up some like a strategy from there. So I started out learning supply and demand, and then one day I got this video recommended to me on YouTube, and it was an ICT video, and I almost like didn't click on his video because I was like, there's so much scammers on YouTube and just in general everywhere, and I was really hesitant, but like something about that video just felt different, and I clicked on it, and I was like, I still went in with skepticism, but like I was listening to what he was saying, and I was like looking at the comments of a lot of people praising him, and you know, I did think that they could be bots, but they didn't seem like bots. And I was just listening because I had already learned like supply and demand. I kind of knew a little bit already, so I can like pick sense out of nonsense, and a lot of the stuff he was saying made sense to me. And then I would actually go and back test it, and then I was realizing oh my gosh, what he's saying is actually happening in the charts. And I think that's the biggest thing. Like, if someone's going to teach something, if you can actually see it happening in the charts, then, you know, it gives validity to what they're saying. So when I did those back testing and I was like, whoa, everything he's saying is actually happening. Like, this checks out. I was like sold. And I traded off and on because of college and like just class requirements and job requirements and assignments and all that stuff. So I wasn't able to get serious about it until I graduated 4 months ago. And I really did not want to get a job. I really just want to be able to be free. And I believe trading is the only thing that can give me that. So that's why I decided to put everything I had into trading for the last 4 months. Okay, give me a second. I'll be right back. And then I'll continue the story. Okay, yeah, sorry about that. So, anyways, so 4 months ago, I was like, I need to become a profitable trader. And I literally, when I tell you, I put everything into this. I put in like 8 to 12 hours a day to master and learn this. And how I traded 4 months ago is completely different from how I trade now. Like, I understood some ICT concepts such as like fair value gaps and like sessions, but that was really it. And I didn't really understand a lot of the core underlying concepts of ICT to be able to become a profitable trader. So it was a lot of like, I would say the first 2 months, so May and June, and the first week of August was really learning a lot of those foundational concepts such as SMT, drawn liquidity, manipulation, power of 3, learning how to determine daily bias, learning different entry models, because my only entry model really was like market structure shifts, and market structure shifts work a lot in Forex, but they don't work a lot. I don't really see it very often as you would see it in Forex in futures. They're there, but they're just gonna look slightly different, you know what I mean? Like, for example, you could probably count this here as a market structure shift, or maybe this as a market structure shift, but like, it's very, you know, you don't consider this a market structure shift. I'm just, because I have the experience, I could kind of, you know, figure out like, okay, I could probably enter here, or like what is, you know, a good place to enter based on what I'm seeing. But like on Forex, I know definitively what a market structure shift should look like, and that sometimes that's not what it will look like in futures. And when I was backtesting, I realized that I was waiting for a market structure shift that never came. So I had to find different entry models that worked for futures, and that was like change in state of delivery or an order block and inverse fair value gaps. So I trade with those 3 kind of entry models. And you know, it was a lot of learning that stuff: daily bias, SMTs, drawn liquidity, sell side liquidity, buy side liquidity. What else? Session highs and lows, time of day, utilizing discounted premium, 12 a.m. open, all of those things. And these are just tools. Not all of these elements are always there when I take a trade. I just need the core underlying concepts, and then I just need, like, you know, maybe a couple confluences to help aid in that idea, that trade idea, and then I just take the trade. But a lot of, it took me like basically, you know, 2 to 3 months, and then a lot of, I think in August and up until the end of September, I've just been back testing like crazy. I've actually back tested 2 years worth of data. I have 2 years worth of trading experience in only 4 months. So I have a lot of experience. And I think I'm finally getting to that place where I can be a profitable trader making at least 1 to 3% return a month. So yeah, right now I'm just trying to kind of get ready to do a PropFirmChallenge. So getting that, you know, 6 to 10% depending on the prop firm a month to pass the challenge is kind of what I'm trying to do right now, but also what I'm doing right now is just getting like live market experience, because I have a lot of back testing, but live market experience is like slightly different because you need to be able to determine whether you're going to put a trade on, when it actually appears. You can't pause it when you're back testing. You need to be able to put a trade on when the market is actually moving. So that's why I'm doing this, and I get to make some videos out of it because it keeps me from being a little bit bored. And yeah, so that's kind of where I am right now in my trading journey. 4 months in, actually, it's October 1st, actually. So this is my 5th month learning how to trade, but I think I'm pretty much got it now. I just need to backtest a little bit more to make sure I'm prop ready, but also that I can make like at least 1 to 3% return per month, which I've been shown to do. I'm backtesting. I made 6% months. I made 3% months, 1% months. I've had some red months, but overall, like even during red months, I'm able to like stay in the green, not lose everything that I've earned. You know what I mean? So I might like make like $3,000 one month, and I might have some red ones, but I still have $1,000. Like that's huge. You know what I mean? So that shows that I can like maintain my capital, and I have really good risk management. So all of those things, are what makes a good trader. So it's been a crazy ride, man. And I think when I pass my first prop challenge and I'm able to start to scale, that's gonna be like so huge and a testament to the chance I took on myself to get to where I am, and the chance I took to set myself up for a life of financial freedom, and not one, building financial freedom for someone else, but a life where I believe in myself and I take chances on myself. And the reason there's a lot of reasons I like trading, and I'll make a dedicated video on this, but like the biggest reason I like trading is because I don't need anyone to take a chance on me. In life, if you're going to go the traditional route, which is getting a job, moving up the corporate ladder in corporate America, because I live in America, you have to have people take a chance on you. You can't burn bridges because you never know when you'll need someone, or they'll come back again in your life. So you have to pretend to be friends with someone even if you don't like them. And I don't like being fake. But with trading, all I need to do is take a chance on myself. The market doesn't care about skin color. The market doesn't care about where you came from. The market doesn't care if you're a man or a woman. And that's what I love about it. The market does not discriminate. The market rewards those who put in the work to learn how to navigate it. And those people, and I believe you need to be very different from the majority to get to a place like this, those people will reap the benefits. Those people that do not want to work towards someone else's dream but their own will be the ones to make this work. And those dreamers, those people that really, really know what they want for their life, will be the ones to get there. And it's kind of sad because a lot of people strive for that their whole life and they never get there. And I'm not there yet. You know what I mean? So it's just very interesting. But that's why I like trading. And I'll make a dedicated video on this, for this particular topic. Alright, how long have we... Alright, we've been 40 minutes in. Well, technically 39. We have 3 minutes until market open. So, let's go! But yeah, that's just a little bit about me and my experience with trading over the last 4 months. Especially, as you know, it's October 1st, 2025. If you live in the United States, not a good time right now. Grocery prices are extremely high. Unemployment is extremely high. We have a crazy president that's trying to tank our country. So, this is a better time than any to take a chance on yourself. All right, we're coming down. We're having a little bit of liquidity come into the market. So go higher, you must go lower first. This is actually the part that I'm always nervous about because I don't know how low it's going to go. Oh shoot, I should actually figure out what my risk is on this, what this is going to be. Okay, so I have, let's see, I have 97,000. This is a paper trading account, by the way. I want to preface, this is a paper trading account. This is not real money. So 97,125 times, let's see, 1.5% would be $500. I don't know, guys. Should I just send it? This is a paper trading, and you're probably like, that's not proper risk management. Don't do that. That's reckless. That's being reckless. I know. Fine. I'll be smart about this. I just want to get the count back to like 100,000 base level because I know I can do that. Okay, so let's try 1%. Let's maybe max leverage, like I'll risk like 1%. So times 1%. So that's 971,000. So if I risk 2%, I can double that. So I still won't be able to get back to base level. I'll get close, I think. No, I'll still be under. What about 2%? Don't do it, Tati. Don't do it. That's too much risk. Don't do it. I know. I don't know. Honestly, what I risk really just depends on how the trade setup looks and my confidence in that trade setup. So right now, ideally I want to risk 0.5 to 1%. I actually do not have a risk tolerance to risk a max 2%. A lot of my back testing, I do not risk 2%, and that's probably just because of lack of conviction, and I did take a lot of losses. I think I'm finally entering that profitability threshold. So, oh shoot, it's 9:30. It's 9:30, guys. Oh my god. We have little to no movement, so yet. Let's see what 2% is. 2% is $2,000. I don't know. Let's see. We'll risk 1,000 or 2,000 or 500. We'll see. Oh my god. Let's go. It's moving. Hey, get down here. All right, we took out. Oh shoot. We took out 5-minute lows. Okay, cool. What I want to see is an inverse. I want to see something get inversed. We have equal highs up here, by the way. So we actually have a London high, so that actually becomes another target. So this becomes buy side liquidity, and we have these equal highs. Although I don't feel like they're as necessary because I think the target will be here anyways. Buy side liquidity. We're coming down. We're seeing some resistance here. Okay, whoa, we're rejecting off of it. We just took out that. Because remember, we're also in the 30-minute fair value gap, so that means... Oh, shit. Oh. We gotta go lower. Okay. If we close... Oh, God. Hold on. Oh, this is set as a... If we close, we're entering here. So I want to risk the hell. I want to risk $2,000. Can't even fucking see. Fuck, I can't see. That's actually really bad. Last time I didn't have enough contracts to enter. Because this is a mini. It's like 5%. I want to risk, but I don't know if it'll let me. Let's just risk 1,000 because last time it like didn't enter me on the trade. I want to see where it closes. If it closes above, I need to see it close. I think it'll close in like a minute. because that would mean that this was inversed. We took out sell side and then we inverse this, but I need to see that candle close. I cannot enter this trade until that candle closes. Ooh, it's going up. It's going up. Come back. It's fine. It's fine. It closed. What the? What the fuck? See, this is what I'm talking about. Oh my god. Why won't... Oh my god. Is that too much like... Oh, what the fuck? Why did it take so long to put in the order? Dumbass. Okay, sorry. We could also enter here. This would be a change in state. Oh. Also, ooh. Oh my god, I think I messed up, actually. Guys, I messed up. You're probably like, why did you mess up? How did you mess up? Okay, so in back testing, I typically don't want to put on a trade until like 940-ish. It's like going up a lot. If that closes, that could become a fair value gap. It's going up a lot. Alright, let's just see. I might have to change my entry. But typically, I don't want to take a trade until like 940. So that I kind of did, what I did right now was kind of wrong. And you're probably like, why don't you want to take, what do you mean you take a trade at 940? Well, you take a trade at 940 because when the market opens, it will do a lot of crazy shit and you won't know where it's going. So by taking a trade at 940, you have a better idea of what price wants to do. So me going in really early just now was kind of setting myself up for like a fake out potentially, or some volatility that ends up coming to take me out before going in whatever direction it deems it's going to go. So that's where the 5-minute closed. We inverse. I could enter here. I'm gonna just leave it because it's not close to my thing yet. Speaking of which, let's do a long position. So this is the inverse, but because it went up so much, I don't even know if I want it to like... Oh, previous day high is a 1 to 3. That's perfectly fine. If it comes back down to give me... I left the fair value gap on the 3-minute. It could come back down to change in the state. And then if this closing makes it a fair value gap, it could... I don't know, I might have to change my entry to here, potentially. So if I do that... Whoa, I have 2 on here? Yes. Gosh. Whoa. Cancel? I wasn't trying to move you. Oh my gosh. Oh, that still checks out. I might move my entry. We'll see. That's very bullish. So you can see like the price wants to go up, right? So I know that it really wants to go up. So I'm definitely more bullish now. I've seen everything that I need to see. My only thing is that I don't know how much farther down it's going to come before it goes up, because we do have a fair value gap here. We do have some inverses, but I don't know if it'll get all the way back down there. So that's why I moved it to the change in state. But you like, see, this is what I'm talking about. You have to have some discretion. 2 minutes until like 8:40, so we'll have this close of this candle, because you could enter at the fair. You could enter at like here, which you probably could extend this to make it. Whoa, I didn't realize that. Oh wow, so that. Oh, whoa. What the heck? I don't know what just happened just now. Remove the entry. Oh, okay. Yeah, that's fine. So this is kind of tricky. So on the close of that candle, I might have to make a decision. Do I want to enter the fair value gap? Do I want to enter the change in state? Let me just see what the 15 minutes is looking like. So this is what I meant. Like, you have to like, see, that's where the change in state is. I would prefer to enter here. And who knows, we might have a candle spike down. So I think I want to see where that candle closes first. If it closes like up there, I'll move my entry to there, because I don't know if it's going to come back. It probably won't come back to this inverse here. It could. But if you want to be a like, you know, conservative but not too conservative, I think where I have my entry is actually the best place. So this is a model that's not a confirm that. Wow, this is very slow. Does it take this long to confirm? Oh my god, that took some time. Wow. Okay. Wow. So okay, so at this point, pretty hands off. I'm not doing anything now. Ideally I'd like to see it come back down, but like it's not really. Yeah, it hasn't really done anything on the 1 minute either. I'm not moving my entry and my stop at this point. It's either it works out or it doesn't. If it continues to move up, I'll probably just come out of the trade. But this is definitely a very bullish indication. So it is 9:41 at this point. Usually you'd want to see, I mean, you could get tapped in around 10. Probably around 10 you'd want to get tapped in, and then maybe it goes to the target until like 11. So it's coming down a little bit now. It's coming, but it's either it hits my stop or it enters me in trade and goes up, or it doesn't enter me at all. Those are the three possibilities that could happen. I could enter at the fair value gap, but I'm not willing to put on that much risk. So I'm going to be a little bit conservative and enter the change in state. So yeah, I used to enter on the 1 minute, but I realized that I had a lot of trades that weren't working out. So I actually switched to entering on the 5 minute. Sometimes I might enter on the 3 minute. Very rare that I'll enter on the 2 and 1 minute at this point in my journey. Oh, you know what I didn't do? I also didn't project standard deviation, because standard deviation can tell you pretty much where it's gonna go. Okay, yeah. So yeah. So a couple things could happen. It can come into here and like just tick into this and then go up. Ideally, I want to see it come back to the change in state. That could very much still happen. And then go up. Because I'm entering at the order block or the change in state. Again, I could enter at the fair value gap, but I don't want to put that much risk on. And I guess I should just put my TP now. So confirm that, because these things take time to confirm. It's really slow. Yeah, so it's just a waiting game at this point. I do have to say this is a lot more chill on the real market than backtesting, because backtesting, you just click the next candle and all of a sudden, boom, it's like a candle just spawns and like you're out of the trade automatically. Whereas okay, it tapped into the fair value, got rejected a little bit. So I really don't want to. So, oh no. Okay, it could just go up from here. That would be like the worst case scenario. Oh no, it rejected violently. Let's see what happened on the 1 minute. That's basically nothing. So from a 1 minute standpoint, we could have just inversed this. Because we did have a change. We did have a sweep. Oh no. So like, okay. So if it was gonna go higher from here, you can actually have like an inverse here and then target like here, but I would need to see some crazy displacement, but that's also risky. Because this could totally be... Okay, actually... See, this could be like an entry, you know what I mean? Oh, it went through it. Yeah, so what you guys are doing, you guys are probably like, oh my god, she's moving her thing. No. So I'm gonna cancel this now because it went through it. But if this had like held and gone up and then maybe came back, I would have considered it. So I wasn't gonna enter just because it had like, especially because this is a very, very risky entry. Okay, here it comes, here it comes. Or not. It's taking its sweet little time. This is super slow compared to like... compared to... Oh shoot. Wow. Well, we just had another sweep. It's so close to my entry. Did I mention that this is very slow compared to like backtesting? You guys are like, of course it is. Maybe I should stream. I should stream, guys. I should become a streamer. Alright, it's coming. Ah, crap. Why does this keep moving? Let's go back to 5 minutes. Oh, shoot. 5 minutes. Ooh, 3 minutes fun. Okay, it's definitely in here now. Want to see it tap that change in state. Some people trade with like inverse fair value gaps. You totally could, but at that point I would just be like. So I trade with like 2 different models. Like this is a model I trade, where I trade the change in state. And it's so close. It would be very unfortunate if this didn't enter at this point. Oops, sorry. I just hit you guys. So close, so close, so close. The entry is just the first part, by the way. Even if you get entered doesn't mean the trade's gonna go in your favor. But I still prefer to be in the trade than not be in the trade. But as they say, no trade is a good trade, right? It's so close, it's so close. Oh, I'm in it. Oh my god, oh my god, oh my god. Okay, guys, I'm supposed to be in the trade. Shit, 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 shit. Oh, fuck. Oh shit, that's bad. Alright, guys. I guess I'm out. Whoa, I did not expect that. Oh my god. Oh, it's gonna hit my stop. Oh, we're out. Damn. Wow. Guess we're done for the day, guys. That was unfortunate. You know what's crazy? I've actually backtested trades that did this exact thing. But this was just not our day. I did nothing wrong. I followed my setup. We had a sweep. We respected this. We had a fair value gap. Keep in mind, we had a fair value gap. We had change in state. And our bias is bullish. This was totally uncalled for. And we waited until 9:40. 9:45. Well, it didn't get there until 9:40, 9:45. So that's very unfortunate. I wonder what everyone else did today. Yeah, I don't think I'm going to do anything else for the rest of the day. That's that. Took a loss today. It is what it is. But I am curious to see what other traders did today. But what's really cool is that this is like very similar to my backtesting sessions. So no, seriously, I've had trades that look exactly like this that did not go as planned. But all my things were there. We had a daily, we had a bullish bias. We had manipulation. Entry model, which is a change in state or fair value gap, chose to enter the change in state. And we're during New York session. So nothing was done wrong. Everything was there. Sometimes you follow your plan and it just doesn't go according to plan. This could still go up, but based on where it is, I have no interest. In fact, based on my back testing, it could probably just teeter-totter or even go lower than expected today. Or it can even like wiggle its way back up and then end up going to previous day's high. Or the real move will happen like at 10 or starting at 10, because sometimes that does happen as well. But based on my back testing, yeah, weird shit just happens. Very unfortunate, very unfortunate. I did follow my plan. In fact, we had an SMT put in. This took the low and this did. That's an SMT. That low should have been protected. We had an SMT put in and it didn't hold. I'm very interested to see what everyone else did. But they might not post their videos until later if they post their videos. But I think, very unfortunate, very unfortunate. So at this point I don't think I'll take anything else for the rest of the day, just because I've seen this exact scenario before, and usually it is very tricky at this point to see if price will continue up or not. It might, but I don't really know what price wants to do at this point. In fact, this SMT is still in place because we still haven't taken this low. So there's still a bullish SMT, and there was a bullish SMT going into open. So I think it's just kind of weird that it didn't hold. But these things happen. I risked $1,000 on that, so that was like 1% of the account, which is not so bad. Very unfortunate though. Now $4,000 down on this paper trading account. Mind you though, keep in mind that a lot of these losses were from before I really knew what I was doing, and then I started to learn, and then I had some wins, and then I lost everything I made, and then I just took a loss. Very, very unfortunate. This happens though. I've traded like backtested this exact same thing. I'm very curious. Okay. Oh wow. New York did nothing. Actually, if you're a bullish, well actually, hold on. No, the first inverse was actually here. So you went into here, put your stop maybe down here. But targeting 1 to 2 at least. So it would have entered you in and did this, but if you held it until it would have hit. This is very, very unfortunate. The only way I'd probably re-enter this, which, you know, usually after the first loss, it's probably better not to enter in again. Just in my experience, usually when I try to enter in a second time, I usually take a second loss, even if I had logical reasoning. And this is not based on emotions, but logical reasoning for entering the trade. For example, the only way I'd probably re-enter this trade is if we inverted this fair value gap, meaning we closed above it, maybe traded another candle above, and then came back and retested it, and then went higher. So it's very unfortunate. We had a manipulation, and then we had another manipulation, still an SMT in place. Fair value, yeah, changes state. This should be studied. I've actually had exact trades that look like this before. In fact, I can probably find them. Actually, I'm not gonna lie, I'm kind of intrigued. Wait a minute, I might actually re-enter this. And you're like, guys, don't, Tatiana, you just said don't enter it again. I know. But I would need to see it trade above, because this could, if this doesn't disrespect this, then I wouldn't be interested. But I'm very bullish, you know. And it's still early. It's only 9:57. So it still hasn't. Yeah. So if this breaks down and it continues to go lower, I'm definitely not interested. But you never know what the market will do. So probably stick around until 11. But it's funny because I have actual trades that failed that look just like this. This is actually worth studying. Probably take a picture of this. That way, if I see this pattern again, I can probably not trade it. Because I tell you, I've had this exact trade that looks just like this happen and taking me out. So right now it's holding, so that's a nothing burger. Today's Wednesday, right? It's a Wednesday. I wonder if anyone's live this morning. Oh, someone's actually live. Let's see. Oh, someone got taken out of the loss just like me.
Just order a fucking hamburger at that point, you idiots. Like, if you order a well-done steak, just go ahead and just delete my number. I don't ever want to talk to you, because clearly you got no idea what is good in life.
Yeah, they got taken out of the exact same place as me. Wait a minute, no, they're shorting it.
We're gonna put D money on them.
Wait, I take that back, they're shorting it.
Someone said well done is the only way. Oh, God. Why? Ew. Tell me you're fucking half retarded without.
But here's the thing. Yeah, I see it. Yeah, you could short this. But I'm not doing that because I'm bullish on day. I'm not going to switch my bias just because it's giving us an indication that it's going to go lower. I'm not doing that. So I'll take the loss and I'll sit to the sidelines until the market wants to actually be bullish. Because he actually shorted this. Which, you know, kind of makes sense because it's 10 o'clock. So if you want to wait until 10 o'clock, which usually the market really shows its real hand. But I'm not switching my bias. And that's the kind of discipline you have to have in trading. Just because there's a short opportunity doesn't mean that you should short. Because the order flow is bullish. And even if this does go down, there's no guarantee that it's going to go really far down. Keep in mind, we have a 1 hour and another 1 hour fair value gap here, like fair value gaps here. In fact, we're actually going up. So I want to see. Look at it, it's going. I don't know. It could hold, it could not hold. I don't know. But this is a very I don't know type situation. So we do not do anything. We don't rush back into the market and try to take another trade. No. We wait for another signal, if there's another signal, to see what markets are going to do. And the market could literally just trade sideways for the rest of the day. You do not know. But I really do think previous day's high is a very good draw on liquidity. But realistically speaking, if I was using real money, I probably wouldn't enter back this at all. I will watch it though, because it's still relatively early to see if it does anything of interest. Like, for example, if it just blew past this, like way up here, then I would be very intrigued and I would probably be willing to enter back this trade, potentially. Like, or if it took this high and left this inverse, I would probably be interested in entering back this trade. But as of right now, Oh, I paused it.
Sorry.
I shouldn't have paused it. I thought it was
These are my new Lucid accounts. I gotta get these funded so then I can get Lucid to pay me. That's 10 points. I'll take maybe a little bit more here to get greedy. We'll see if it's gonna play in my favor or not.
Is this guy on NASDAQ? I can't tell.
Stop is, let's say, 780s for me.
I actually don't know if this guy's bullish or
Out of here.
bearish. I think he's bullish.
Ooh, another wiki wick. I want to see some push here. An hourly candle, like you said, it looks good for a push here.
Yep.
You're out?
I'm out. Yeah.
Fucking A, D-Money.
$150.
Front running me. He's front running me now. He's fucking front running me.
Oh, guys, if this
All right,
closes...
I'm out. Now it's gonna go, chat. That's pretty good.
Yeah, it's good.
I mean, that was like very little. I don't think I had any drawdown there. In at the 91, out at the 805. You know, it adds up, chat. I know everybody wants to see massive profits, and there's that push to take out that wick. See, that was kind of what I was thinking. Like, worst kind of worst, we would take out that wick,
Yeah.
that 820 wick, just to like trap, you know. I mean,
Alright, I would probably be more interested in if we close this now. So I might actually... I'm at limit. Sell. TP. I want to see this close though. See, we're getting that push. That's what I want to see. That SMT is still in place, by the way. I want to see this close. Because if this closes, we just inverted this. Bye. Takes a while for the trade to be put in, which is kind of annoying. Come on. There we go. So it looks like we just got in early. Because we had another manipulation. If I'd waited until 10, I could have avoided this. I'm going to actually study this because I've seen this exact thing, this exact situation happen before. It's very unfortunate that we took that loss, but we only took $1,000 loss. Because now if this works in our favor, we actually get that back plus some. But do you guys see how I waited for another valid setup before I just, rather than just quickly trying to get back into the market? Oh, is ICT live? Oh my god, ICT is live, guys. Oh my god. Ah! Shoot, ICT is live. ICT is live. Stupid ad. Oh my god, I don't care about your stupid ads.
The algorithm is an AI. It used to be a collection of men that would manipulate the price of whatever market they were in charge of. But it's efficient now to have a structure just like Pac-Man. Okay, remember the game Pac-Man? Pac-Man starts this game here. He goes down, eats the power dot below here. Now he can run and go after the ghosts. Where's the ghosts? Anybody that's short has their orders up here. So it goes, goes up there and eats up all of the ghosts. And then where he needs more power. So where's he going to get more power from? He's got to go down below that low here because there's a power dot below that.
Yeah, I got taken out. It's very unfortunate.
He had these real big white dots or balls. When he ate that, it made him immune to the ghosts that were trying to chase him down and kill him. And between where he was and before he got to that power dot would be these individual little dots. And he would eat them, okay? And that would cause your score to go up. Well, the real score is when you eat the larger orders, which is the ghosts. And Pac-Man or price goes from this area after it eats up all these ghosts, it needs more power. So it goes back down and eats the liquidity below that low. Once it gets that, then it's energized again. Where's it going to go? Well, if it came down here and it isn't going to keep dropping, what do you look for? Old highs. Now, old highs is not just that. It's the ones I just showed you in Asia. That's an old high because I'm not supply and demand. I cut through ranges. That's what the algorithm does. The algorithm is going to refer back to old price data that's pertinent to right now.
I actually just realized something. I don't know. I shouldn't have paused him.
And now this high here.
Because now I just delayed it.
Rallies up, takes that here, and it's also sweeping.
But I just realized something by looking at his chart. We had an inverse right here. This is actually our earliest entry.
If you strip away everything I said today,
Well, actually, maybe not that, because there's a second one here. But this actually would have been your earliest entry right here, but that's a lot of risk. You would have had to...
retail traders look at that, and they are scratching their head thinking, how are people trading that? And I'll admit, if you don't have any narrative skills, no idea of referencing where liquidity is, how price is going to use old reference points, this right here, this is complicated.
It is.
It's very complicated. Because how can you make any heads or tails out of this back and forth gyration? But I laid down the map before we even started today. I gave it to you. I gave it to you. And it's using tools that I've handled for 3 decades. I've kept this stuff guarded for a long, long time. And I have looked at all of you through my screens for years, watching you fall victim to this stuff. And I've gifted it to the community. I've given it to you. And I have made millionaires all around the world. All around the world. Some of them don't want to admit it. And others are upstanding folks that say, you know, that man taught me. And I'm thankful, and I have a whole different appreciation for life and, you know, a bright future. And that's what I'm wanting for you. I want you to do that.
Yeah.
It doesn't cost you anything to be here. It doesn't cost you anything to watch my videos. You don't have to watch my videos, really. You don't have to.
100%.
But if you want to learn, I've made it available for you.
100%.
But you just go in and you take bite-sized bites of it, okay? Digest as much as you can. Don't try to do too much at one time. Don't try to do like 4 videos over the weekend. Just pick one. Really listen to what I'm teaching, because I'm not talking because I like the sound of my voice. I'm talking because I want you to know every facet, every minute detail, so that way that you know that you know. And if you rush through a number of videos, you're going to have questions that you're going to feel like they never were answered, or I will never be able to answer because so many people ask me all the time, can you do this, can you do that? It's in the videos. 99.9% of the things that you're going to ask me is already out there. And you want me to save you a lot of time. And I would burn up all of my time if I did that for everyone. I got 2 million people following me. What do you think that's like? It's hard to keep up with. So I have to build a barrier. So this is all I'm willing to do. Not because I don't want to do more. It's just at some point I will wear myself down, which is what I did. And it affected my health. And I'm not going to go there again. So I have to have a balance in my life. I'm getting older. I'm not as strong as I used to be as a young man. And I have to pace myself. But it doesn't change the fact that you have this information available to you.
Ads.
Coach of the year, right?
But anyways, so... But, okay, so he's basically saying that it rushes up here and then it rushes back down. I mean, I guess... And actually, your earliest entry was on the 2 minute, actually, which is right here. So it came back down. It sort of tried to tap into it, didn't get it. But if you were entering on, I personally wouldn't have entered on the 1 minute. This is your first inverse, but actually no, yeah. After we enter here, you can enter here or here. This would have actually been your ideal entry. And that would have gave you a lot to run to. But I didn't see this move coming. So that's the thing. But I'm gonna study this because ICT just talked about it. And what he's saying makes so much sense.
You just think they're just gonna just bend over and let you just stick it up them and they can empty their pockets and that's it? You can just walk away and nobody's gonna, do anything back to you? They're gonna make you earn it. They're gonna scare you at price runs that come out of nowhere, and it's gonna be, oh man, what's going on? Where did this happen? Oh, let me get out of my trade. And they'll entice you.
If it takes the first high, I'll move it to break even.
So you go and you'll buy more or sell more. And then they rip it against you the other direction. They have the ability to do that. And they laugh at your idea of buying and selling pressure. They are the pressure. It's a pressure cooker. And if you don't know what I'm teaching, you're cooked.
That was a good analogy.
What I taught today, insightful, if it was helpful to you, just give me some feedback. Let me know. I know it's good, but I just want to hear it from y'all. So I'll talk to you next time. Be safe and good luck with trading.
That was it? That was it? Okay, well, I learned some. I would probably, okay, I'll rewatch the video after I get off the recording, because I want to learn what he's, like, actually talking about. Like, I've seen this exact, like, price before. Like, actually, this has happened before in backtesting. I've seen this happen before. So, this has happened to me before. I'm going to study the living daylights out of this. I'm pretty sure I took pictures of this exact thing happening to me, like getting stopped out before. And luckily for me, I'm going up. If we take that high, I'm going to move to break even. And kind of just let the rest of the trade run out if it does. It's kind of moving very slow. ICT finished up, so I guess that implies that the main move of the day is over. But who knows? The market still moves, so it could still go up. But I guess the most energetic move of the day is done. So who knows? I could move this to break even now. It's pretty lethargic. It's not really doing much. I really want to see a push though. It's still too early to move this to break even. We are high away. I think at this point I'll probably just move my stop up. Well, technically here would be the better place to put it, but because we've moved up so much, I actually, let's see, there might be a better place to place our stop. This one I might as well just move it to break even, huh? I typically like when it moves at least halfway up. I'm gonna move it to break even, and my reason being that this is technically supposed to support price up. Usually I wouldn't want to take first profit until after the high, or at least until it reaches standard deviation 1. But I'd rather not lose any money on this, especially since I took the first loss early this morning. And this order block here is supposed to support price up anyways. I do think it's unfortunate that I took that first loss, but I'm going to rewatch what ICT said, because again, I know I keep saying this, but I've seen this exact thing happen before, and I've actually gotten taken out on similar trades that look just like this before. So if I can avoid that happening next time, that would be very great. Price is really lethargic right now. It's not really doing much. Like, at this point, I would probably, like, not do anything. I'd probably just, like, leave. It's still early. Because I'm at break even right now. So it's either it works out or it doesn't. And it's only a 1 to 2. Ooh. So I'm wondering if I take partials, I might risk lowering like what I actually make on this trade. Typically once it moves half of the way there is when I would want to move my stop to break even. But I moved it ahead of time just because price is pretty lethargic, so that could mean that price is going to reverse on me. But also I really didn't want to make another loss on a loss I already took. But as you guys can see, I did not rush back into this trade. I waited for another signal in price that it was going to go up, and I entered back in. Right now I'm up, but this can also come that down. I feel very strongly about the draw on this previous day's high. So we'll see if we get there. We kind of have an SMT put in. We took this high, S&P did not, which I don't like. So now I'm even wondering if I should just take some off. But I don't really want to because you see how it's struggling to get past that equilibrium point? It's pushing. If it gets a standard deviation one, I might just take 75% off, which 75% of 14 is what? If this makes a fair value gap, that's even better, because that's very bullish. I'm trying to find my calculator. Okay, so that's like 10 contracts-ish. I might just take off 10. Wait. Why does it say I have 2? No. What the? Wait, no. I'm so confused. I want to just take off part of my... Oh, here we go. I clicked the wrong thing. I'll close 10 contracts at standard deviation, and I'll just leave the rest running if it gets to here. So, as you guys can see, it started to work in my favor. I just waited patiently. I wasn't in a rush to get back in. And, you know, even though I took my loss, I said, okay, I'm probably just going to get off the charts, guys. But no, it was still relatively early. Opportunities could still be there. If I'd gotten off the charts early, I would have lost this opportunity. Now, if it was 11 or 11:30 and nothing happened, then yeah, get off the charts. But it was still early. So I'm going to watch this closely. Hopefully it gets the bottom half of the standard deviation. I'll take 10 contracts off. In fact, I'd probably argue 12 contracts. But 10 is pretty good. So it's getting there. I'm confident in this. I don't think about I'm confident in the rest. I actually want this to close, because if this makes a fair value gap, that would be very good, because then that would support price higher. I wouldn't want to see this fair value gap close. But we have 3 minutes until We have 3 minutes until the... the close of that candle, because I'm on the 5-minute. Don't really want to see that close. What's good is that this is a risk-off trade, though, so I can't lose anything on this trade at this point. Two minutes until that candle closes. Just waiting patiently. Lots and lots of waiting. I think that's gonna stay open. One more minute until that candle closes. I'll just move this up because we don't have a risk on trade anymore. Oh, it closed. Yes. Yes, that's a very good sign. Definitely be journaling this and watching what ICT said on that trade, like talked about before the market opened. Okay, here we go, here we go. Let's see if we get that standard deviation hit. At this point, I probably don't even need to close the trade, but I'm still going to be cautious of this standard deviation here. So I'm just going to take off 10 contracts. Really happy I stayed on the charts, guys. Really happy. Price was really moving lethargic in the beginning, but it started to pick up speed. Sorry, I'm quiet, guys. I'm just watching and thinking. It's gonna get there. Okay. We're getting closer. We're getting closer. Hands on the trigger. Let's go. Let's go. Gotta be careful. Not two hands on the trigger. Don't want to come out too early. Okay. Almost there, almost there. Oh. We're almost there, almost there. Just a little bit more push. Get to the lower end of this standard deviation here. Come on, you can do it. You can do it, Bryce. You can do it. The worst thing that this could possibly do is if it fell off the face of the earth. Let's not do that. The world is not ending yet. Not until I get my profit, then the world can end. Oh my god, it was so close. What the hell? Come on, come on. Please don't do this to me. See, this is why I said I'm going to get the lower end of that, because it's getting close and it reacted kinda like it wanted to fall. I think it will get previous day's high though. I think some of the best trades are when we're below previous day's high, when we're bullish, because that doesn't happen every day. Just a little bit more. I did not realize this, but I thought this was the 5-minute for S&P. This is the 50-minute. No wonder it looks different from over here. Whoa, 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 whoa. Oh shoot, almost dropped my mic. Price is just playing with me at this point. It's like literally dangling the meat in front of my face. Seriously wondering if I should just take 10 contracts off now. So there's a fair value gap here. It could definitely come back into here and like push higher. I don't really want to see that though. But I might not have a choice. We were so close to the lower end of that standard deviation. I don't want to be, I'm not feeling any fear because I have very strong conviction that it's going to get up there. And I don't want to take the 10 contracts too early. I really want to take it at the end of that standard deviation, because if I take it too early, it's going to cut into my profit. So right now it says the max I'll make is $3,000. But if I'm going to take a partial, it's probably going to be a little bit less than that. So it's probably going to be like 2,000 something. Which most likely means, because I lost... How much did I lose on the day? I lost Ah, shit. What am I doing? I lost 1,000. It's like $12,000. So I'll probably just net like half of that today. Probably just make $1,000 today. But hopefully I'll end up in the green. For today, anyways, not. You see how we're facing some resistance up there? That's why I'm going to take it at the lower end of that standard deviation. But not only, I don't rely too much on the standard. I rely on the standard deviation, but you also have to keep in mind that previous day's high is right here. So this is a realistic target. But as we get closer to this price, kind of, you know. Alright, we're getting a push again. Okay, hand on the trigger. Hand on the trigger. Okay. Okay, we kind of got it. I really want us to get up there though. All right, I took off 10 contracts. And that got me, I made back what I lost today. So that's good. I'll make a little bit more if this continues to go up. Cuz I'm at $700 right now. So I'm actually up. If I get the full amount of that, I'll be higher than what I started with today. And actually, I realistically want to give this room to move, but I also could just move my break. I can't even. I could just move it up here to break even. I don't really want to lose everything I lost. We're really close. So I really wouldn't want it to come back down here anyways. Either take me out or take me out at a profit. Take me out at a profit or take me out at a profit. You know what I mean? Alright. I think it's gonna hit. This was a wild morning. Wild morning. But I'm happy to see that all my backtesting and 2 years worth of trading experience in 4 months paid off. Oh shit, it's gonna hit, guys. Oh shit, it's gonna hit. It's gonna hit, yeah. Woo. Alright, realistically speaking though, I'm not cocky. I'm not like, I actually felt nothing during this. And that's how you have to be. I don't feel anything. I don't feel anything about the win. I don't feel anything about the loss. If I took the loss, then I would just, study it and figure out why I took that loss. And then I come back the next day and just do it again. You know what I mean? Can you be so friggin' serious? We were like just a couple ticks away. It'll get there though. It's previous day's high. It's a very, very, very strong draw on liquidity, especially for bullish. See, I'm so happy I didn't take. I felt very strongly that we're gonna get up there, so that's why I didn't take the 10 contracts early. And it could very much go past this point, but I don't care. At this point, I don't care. I already ended up more so than what I started with today, so that's already a good sign. And I think how much will I be up if I take this 800? So this is what the equity would be. So So account balance, realized balance right now. I definitely started a little bit more. I'll definitely be up more than what I started with today, regardless of whether it comes back and takes me out or takes me out my full profit. Full profit will be $800, so I'll have made, I don't even know what I started today with, actually. I'm not worried, guys. I know that's gonna hit. I'm just very bummed at that loss. I really want to figure out what the hell happened there, because again, I've seen this in backtesting before, this exact thing. I've gotten taken out before, and you're probably like, well, if you got taken out before, how come you didn't avoid that? Because my rules were met. We don't hesitate. My rules were met, so I took the trade. But if I see this again, I want to know not to take the trade, because of this is gonna, because something like this might happen again. So I'm gonna watch back ICT's video, and I'm going to log this in my trade journal and study the hell out of it. And then hopefully I took some, because I've been journaling all of my backtesting stuff, so I think I have some losses that look just like this. Like literally just a couple ticks away. Are you serious? But because we're in deep into that standard deviation, we're gonna face this kind of stuff. But previous day's high is right here. So that's what I was aiming for. We still have yet to take it out. Now do you see why I took my 10 contracts off of here? I really don't want to see this come all the way back down here, like, at all. Let's see. That's not good. It's in a fair value gap. So it'll probably have a push and then maybe break down. Or continue up. Right now it's in that fair value gap and it's holding. I want to see it hold. I don't want to see it breach that. Sorry guys, not saying anything because I'm just watching price. I'm just watching it, see if it gets up there. Price is taking its time to take previous day's high. Now, do you guys see why I took most of my position off at the first standard deviation? Because of this exact reason. Once price reaches standard deviation, it starts to kind of teeter-totter back and forth. And that's kind of what we're getting here. I still believe it's going to take that high. I just don't know how long. Maybe by 11, hopefully. But I'm hoping it doesn't come back down where my stop is. Because in my opinion, it shouldn't get down there. Ah, frick. It made a friggin' fair value gap. Honestly, the reason I took my position off at the lower end of that standard deviation honestly just comes with experience. I just understand how price reacts around that stuff. And this is what I don't like now. Because there's a fair value gap, price might want to come back into it before it goes higher. I honestly do not want to see that. I was really hoping I'd be done already, so I could get off the charts. And I guess you could say I technically don't need to be here anymore. Just let the trade play out. But I want to see it hit my take profit. Oh, woe is me. Also, do you remember when I told you that just because there was an entry here doesn't mean that I'm gonna go short? Because I'm bullish. My bias is bullish on day. I'm not gonna flip my bias. Imagine if I had flipped my bias. I would have just lost twice. That's why it's very important to figure out what the daily bias is and to stick to it and not, go off track. Because that could have been a 2-loss day. But I knew that I'm not bearish. Just want to see that hit my take profit, but this is really taking longer than it should. And the crazy part is, it was just like, what? 2 ticks? It was friggin' 2 ticks away. That is diabolical. I really wonder what Forex did. Oh my gosh, my trade idea on Forex worked out as well. It teeter-tottered a lot, but it was going down. It didn't hit my take profit yet, but it was basically like 50% of the way there. That is crazy. Not really efficient price delivery on Forex though. And even though the trade would have worked out decently, I think if you were I take that back! It worked out! The chart wasn't loaded yet. Holy shit! Forex would have been a W day too. Whoa! I'm killing it, guys. But probably wouldn't have been a W day because the spreads on Forex are just absolutely abysmal. So technically it would have hit my take profit, but because of Forex spreads, it probably would have taken me out of profit. So that's what I meant by you have to be careful of Forex. You have to be careful of the spreads. So like you probably want to take your entries. You want to take your entries maybe a little bit earlier, your stops a little bit later, and your profits a little bit early. It's messed up, I know. starting to go back up a little now. Maybe if the next candle closes and hasn't taken my profit yet, but it closes as a green candle, that will be a swing. So I probably could move up my take profit, or like my stop loss, I mean, anchored at that low, so I can lock in more profit. Because I'm really confident it's going to touch that high. I cannot believe it stopped short of 2 ticks. Alright, let me go down to the 2 minute. Let's see what we're working with. Okay, it's pretty, oh my god. Yep. It's exactly as I thought. This standard deviation thing, it's a freaking mess. You see that this has no structure, right? There's no structure here. Oh my, oh frick. Oh, this is no. See how this has structure? This has no structure. It's because we hit standard deviation. So price is probably going to go sideways for the most part now. But just because it's going sideways doesn't mean it can't still come back up and hit this. But jeez. And because this has no structure, I don't know if I necessarily... If I move it under here, how much am I locking at? 500? I could. It's not confirmed yet. I really rather the max 800 though. I'm becoming a trader, guys! Crazy about that Forex trade, too. Would have been under a lot of heat in this Forex trade, though, I have to say. I'm killing it! But can't get cocky. Gotta be realistic. After this, I'm actually gonna do some back testing to just solidify my strategy. So, what I've been doing, I kind of changed my strategy a little bit, which actually has made me 3% months, 1% months, and 6% return. I'm a little bit below the 6% right now because of some losses I took, but I've made a 6% return. Trying to get up to 12%. Ideally. So once I can do that, then I'm gonna like start practicing for the PropFirm challenges. So I'm gonna try and gain 6% per month, between 6 and 10%, because that's usually what prop firms require to pass their challenges. So like literally after this, probably gonna go, I don't know, chill for a bit. Then I'm gonna head back into the back testing, and yeah, just keep trying to make sure my strategy works. I know I haven't confirmed the placement. It's because what's being generated right now, as you can see, this is low resistance liquidity. So what could happen? It could spike below this and then go higher. So that's why I'm a little like, 2 ticks short is just absolutely diabolical. This is the first time in like the last 4 months that I generally feel like this is possible. Because in the beginning I didn't know that, you know, like if we're looking at this, right, I did take these were 2 wins I had a couple days ago. And then I traded the real market and lost basically all of it back. I gave it all back. Took $1,000 loss, made this back, and I'm gonna make some of this back, so that's really good. So my losses or winners started to average out. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 1, 2, 3, 4, 5, 6, 7. If this hits my take, well, this is definitely going to be 8 because regardless, I'm going to make profit on this regardless. So that's going to be 8. So my win rate is like, for those results anyways, is like around 40 something %. Whereas I think my win rate will end up being higher from now on. Because this is going up, I'm actually gonna confirm this now. It probably could end up hitting it. Because it's pushing, that's why I moved it. Oh. So close. Come on. You can do it. Yeah, so I moved this below this anchor. It shouldn't get back down there before it takes out this high at this point. And we're out. Ooh, what an amazing day, guys. Crazy. We started off with a loss and ended up with a profit. Wow. Oh, wow. That is amazing. Alright, guys. Don't forget to like and subscribe as you see me go on my journey of becoming a profitable trader. So that was a crazy. Took a loss, made it back, and then some. But I'm gonna definitely study what happened here, journal this. Thanks for watching. Don't forget to like and subscribe. See you in the next one.